You only got filled on a partial, and that win rate is going to be skewed based upon that. And that's why I always say, for me, it's more about taking advantage of the markets when they're giving me what I want. And a lot of times during those times, you will actually see the market, it will be harder for you to get a full position on. And the reason for that is because the market is most likely giving you what you want. And so that's where like the true testament, the real test is of you as a trader is, are you actually executing well enough when you're getting what you want? Because a lot of times you'll see traders get exactly what they want and they didn't get in, or they only got in with a small position, or something happened to that with that. And so, I also want to just mention that my best year as a trader actually was one of my lowest win that I calculated. I haven't calculated them in several years because I'm not nearly trading as much, but one of my best years, my best year was one of my lowest win rates in the first 15 years of my career. And that was in 2008. And I had a ton of losers. And there was a lot of days where I'd come out where I would literally have, probably 8 out of 10 were losers. And I'll have 1 or 2 trades that just pulled me out of the hole. And it was a unique time. There was a ton of volatility. And the more volatility that you have in a market, you have a lot of times I'm scratching trades or losing a little bit, and because there's another opportunity right around the corner, right? So you have to look at the activity level too. And so that matters so much. Like these days, I am much pickier with what I'm doing. And so my win rate matters a little bit more in the sense that I'm not taking 25, 30 trades in a day. I'm taking 1 to 4 trades. So it's like, if I'm wrong with 2 and I'm right with 2, hopefully I squeaked out a win, right? And so there's so many things that go into it to understand. If you're very active, it's just even less and less of something I think that is having an impact. If you're much slower in your execution, if you're swing trading, and that, well, win rate's going to have a greater impact, right? Because you're getting less looks. And so that's why I try to say to everybody, don't fall into that trap of looking at that. Understand your style and the way that you're trading, and look to see at the end of the month, instead of what was your win rate, which is what I used to do, like I mentioned, like how did I trade on the good days? How did I trade on the bad days? And fix it from there. A lot of my bad days, I'll go back and look at what I did this month so far. Man, the beginning of the month, I was really steady with a lot of winners, and I had a couple days where I traded quite a bit. It was actually 1 or 2 days where I got really kind of aggressive and I was trading a lot, and I had some losers. And by the time I paid all my fees and just did everything, it bled into a lot more of my into my month. And you would look at this month and say, well, my win rate is higher because my win days have been higher, but actually not nearly as good as I've done in some of the previous months of the year. And so there's just a lot that goes into this. And I think that you and we had a great conversation on this, and I actually want to, at some point today, I want to go to the charts, and I actually want to show some things that I'm seeing in the market, and maybe even go over some examples as to why, we'll tie it into this, as to why win rate doesn't really matter.
Okay, so Anthony, before we do that, I do want to, great comment about really what you should focus on, right? And it's kind of an inconsequential statistic. And what I mean by that is, yes, it could be telling, and if you focus too much on it, though, you're avoiding the issue, right? The issue really is how, like you said, take advantage of the days that you do well on, and take from the market, and don't give as much on the days that you don't do well on. I liken it, going back to my favorite sport, baseball. They started tracking these statistics about launch angle and speed off of the bat and all of these things that hitters don't focus on. They're not thinking about how can they hit the ball faster off the bat and increase their launch angle. They're just focusing on hitting, right? They're focusing on a good swing. They're focusing on being a stronger batter. but they're not thinking about the statistics. And I don't think win-loss ratio or win ratio, whatever you want to call it, I don't think it's something we should focus on. It is exactly what you said, focusing on taking advantage of the days that present themselves to you where you do better as a trader.
Yeah, 100%. I'm glad you brought up that baseball comment, because it just makes sense. When your mind gets focused on a certain thing, and like I said, I can't stress this enough. I did this. I was there. Made money 15 out of 20 trading days. I'm still not making money. Why is this? Well, it's because of what I was doing on losing days versus winning days. Win-loss ratio matters more. To really separate yourself from someone who's just executing a strategy, you really have to learn how to become a trader. And that's why we talk about this on Develop Your Edge. Is your focus should be taking advantage of what your strategy is showing you, if the market's respecting it. And if it's not, you might take a bunch of losses, and then eventually the one that does work, you've got to hold it, and you've got to stay true to what you've put in with your homework. And that's why I want to tie in today. I want to actually go to the charts now. I want to talk about a couple of things. Number one is, I talk about my process a lot here, and I want to actually tie in what I'm seeing currently with technical analysis in the S&P, because obviously it's another busy day in the market. And I want to show actually why I am not actually going to be actively day trading on a day like today. I'm actually sitting in a core long position right now in the E-mini S&P, and I'm going to explain why. And I'm not going to trade around it, because this is one of those things where you have this push-pull type scenario. It's understanding your strategy as a trader, and you have to recognize that in a day. And I know that I'm putting myself in one position where I just want to wait and sit and hold and see how it works, versus try to just keep taking signals intraday, because I feel like we have a push and pull type day set up. And let me show you exactly what I'm looking at here. And so it gets really interesting on the daily. Everybody knows that's followed me on the show or on social. I really start always with the daily. I use my Bollinger's 20 period 3 standard deviations. I've got my little moving average here right now, which I'll just show you as a 5 period moving average. So it's a 5-day moving average, no middle Bollinger Band. And I've got my Fibonacci retracements, which everyone knows that I like 30, 50, and 70%. And I talk about these as my quadrants, and I look at this on the daily. And we've gotten down to this key level that I've talked about, roughly 44.13. I talked about this on Twitter. I said that's going to be a key level for me to watch. I rarely trade overnight, but I stepped in and got long S&P last night at 44.13.5. And I stepped in and I bought the market, and I said, look I'm going to be in long here. I like this area. It's on my daily. I'm going to wait to see what the 60-minute comes in the morning. I'm going to watch that. And if that continues to show me something as we start to come down with time frames, I'm going to sit long small, but I have to recognize that I really can't be aggressive with this. And here's the reason. Number one is you're looking at this delta has been coming in very negative. And we've talked about this. When you have negative delta that's coming from resistance and the bears are actually winning, which is what you're seeing here. And I'll explain in a second. You don't want to fade that delta. And so what's interesting is we've been staying below the 5-day moving average, and you see the negative delta every day pushing below the 5-day. So which means in the short term, you're just seeing sellers, and it's also pushing through my neutral, which was 4,500. And so what happens is you get a day where you push above it with positive delta like you saw here, and immediately the next day, negative delta, negative delta, negative delta. So it tells me that the sellers are there and you have to respect it. But then when you get to support, you watch the delta. So what's very interesting to me today is a couple of things. One is look at this big delta negative bar here today. A lot of people selling bids today. A lot of sellers out there, the most we've seen in 2 months. Okay. And when you see that, you look at it and say, is it below my support? It's not. So it's very interesting, right? Like, let's see what it does throughout the day. Stay patient. A lot of negative delta. Let's see how the day pans out. Be small, be smart. What kind of helps me is we're oversold. When you look at what's happening on RSI, you're getting to oversold territory. We came from overbought. Now we're entering oversold territory. So it's something you keep in mind, and you want to look at that and say, look, We're getting really negative delta. We're getting oversold. We're hitting support. Don't be crazy long intraday. Stay long very small and wait to see how the day ends. So that's my mindset coming into the day. How we tie this into win rate is I know on a day like today, I am not going to fight going against like trying to get a bunch of winners against the potential trend. If the trend is down, which so far I think it's been pretty flat from where we opened, I'm not going to put myself into a million scratches, I'm going to try and make a tick or lose a tick, because I think that what's happening here is you're waiting to see if the bulls or the bears are going to fully take control of this market from this point going forward, right? From this moment, it's a moment day. So then I pop in the 60-minute. And this morning when I woke up, I woke up at 3:00 in the morning and I said, let me just see what my position's doing. And I remember waking up and I was like, you know what? Look at the 60-minute Bollinger starting to come back in. And you see that 17.5 is now my blue zone to buy. And I said, you know what? That's a good sign. This morning I put a tweet out. I said, I think we're going to test 39.25. That's my 50% line in the Bollinger Bands. You can see that right there. A lot of sellers coming in, pushing down on an area that I'm already long. I'm not going to get aggressive long more, but I'm getting support from the 60-minute showing mean reversion. What I mean is when the Bollinger Bands were open over here, I was a little worried. I stepped in long at this point. Came down, Bollinger Bands got flat, started to point back in. What have we talked about? We're boxed in. All I'm looking at on a swing position is a mean reversion to test 39.25. And if it can hold here, or below or above, that will determine my next move. If it gets up into here and I watch the action and it starts to stabilize above it, and maybe this Bollinger Band opens up, now I can add with a big winner on, keep a tight stop on the add, and look to potentially trail for a test up to 44.61-ish. Now, 61, what's pretty interesting is when I looked at that this morning, look at the 5-day moving average, which has just been a great guide, comes in at 57. So if we get above 39, what am I looking at? 57 to 61, probably out of majority of the swing position in front of that. And so I have a very clear-cut look of what I want. Then I go into the intraday, and what do I always talk about? I always say opening range, and this is where I said you're going to have a push and pull day, right? And so let's pull this up. You guys know the F6 on Ninja to do your horizontal lines. Opening 3 minutes. Like I said, it's really more of a trend down day. As I've mentioned, we're below the VWAP the entire day. We're actually testing the VWAP right now. The plays that I would be getting would be short, because I've talked about this. Opening 3 minutes, we break, be selling off of VWAP, but I'm long in a swing. Do I want to step into my short in the short term and trade against it? Not really, because I have conflicting messages here, right? And we talk about, we've talked about win rate and talking about being a trader. When I have conflicting messages, my thought process is be small with the bigger time frame. Don't get caught up in the short time frame trying to be short today, because it could be playing out. My reward to the downside could be minimal. And you look at how well it's held my daily stuff. And so I'm trying to minimize, as a trader, the amount of exposure that I have. I'm picking the higher time frame to stay with it. And I'm looking at the shorter term time frame saying, don't be aggressive. And this comes back into why I say, like a day like today, I have one trade, potentially two, if I potentially add to this at some point, which right now it doesn't look like that will happen. My win rate's 100%, right? But on other days where we have a lot of things going on, I might be short a million times if we're not near the daily, and might have a bunch of winners and losers, and it's just a totally different context of the situation. So it goes back to understanding the context of why you're doing things and adjusting your position sizing and adjusting the situation based upon the market context.
So, Anthony, just going back to your decision-making process, going from the daily to the 60-minute, was it the 60-minute chart that said, okay, you know what, we're gonna go long. I feel like this could be a good trade. It might be a longer trade. It might be overnight. I don't know. Will you carry that trade overnight?
Yeah, well, I bought it overnight. This is a swing position for me. So that's why I'm staying away from the day trading today, because my day trading was telling me to be short. What's happened is the prior several days, I've been looking to be short intraday, right? And so I'm doing a lot more intraday trading because I didn't want to carry a swing short. We're above the 5-day, we're below it. My bias was even over here a little bit bullish. Could we rally potentially? So I was not confident in holding something overnight. Yesterday, we hit an area. I look at it and say, look, this is a big area, a big block on my daily, right? But you can't get super aggressive because that bottom Bollinger Band is still open, that mouth. And I talk about that. That still could mean range expansion. So the bulls are nowhere near out of the woods yet. What I'd like to see is, at least for this short term swing, is just stabilize on a daily level and get a confirmation from a 60-minute. So then you go to your midterm level and you say, look at support 17.5, no hourly closes below it, not one. Every time it's come down to it with massive negative delta and an oversold on a daily, we've bounced. That's good reaction. I don't want to overtrade that. I'd rather be small and smart right now than, big and aggressive, because the situation's push-pull. And what I mean by that is, look at my short term. This day tells me we're probably bearish. So I don't want to sit. I don't want to trade against my core position. I will wait to see how this pans out. And until then, I will stay in a really small position so I could sleep at night. And I'll just wait to see how things pan out. And if it works out, great. Sometimes, I'm not going to be able to get aggressive with it. If it's a winner, if it ends up being a winner, great. If not, it's a small position. I'm not going to do anything to it to screw it up, because I already bought it. I feel right the way I wanted to. And I don't want to step in and do anything to change that position.
Got it. And, at this point right now, it's starting to turn up. If things were to favor more of a bullish situation, which might not happen today on the 3-minute chart. But, let's say it does start to look more bullish. That goes back to your idea of adding to your position, maybe not in a big way. But like you said, from the 60-minute chart, look, if it gets up here, maybe we'll start to add a little bit, but be very cautious. You would see it. Would you see it first on the 3-minute chart, or would you see it on the 60-minute chart as well? Kind of concurrent.
Well, the 60-minute is already telling me today I want to see a test of 44.39 and I think at this point it's a good probability. I should also talk about what my stop is and why I say two things. Why is it a good probability? Because no hourly closes below it, negative delta coming in, oversold on the daily, and they can't get below my support. It's not about my support or anybody's support. It's how the market acts when it tests it. And when I see a lot of sellers come into support and it can't push through it, that to me is squeeze. Right. And so to 39.25, not that big of a deal. It's 14, 15 points from here. Big deal. And so I have to really I go back to, this is the difference between being a trader and executing a strategy. My day trader stuff is telling me short. What would change me to want to be bullish? Potentially would like to see this order flow VWAP get back up into the opening 3-minute range. And I'd love to see this delta stay negative and all of a sudden the market start to squeeze higher. And this is one of those days where it's like the I shouldn't say the over, but the aggressive amount of selling and really not getting us to go far at all. This is why I like cumulative delta. Like, you look at this bar and you would look at this bar and be like, boy, we should be really getting smoked, right? 33,000 negative delta. Market's absorbing it. We're right where we opened. We're actually up on where we opened on Globex. And so when you think about that, that's supporting into my theme. If this day does not start to go lower aggressively with delta, then the squeeze could happen. Now, and so you go back to your 3-minute and it's telling me, yeah, it may happen. And so that's why I bought them right, stay long, small, and just wait and see what happens. I mean, right now I've got to just sit back and wait and watch the action.
Right. Well, thank you for that. We're running up against time, Anthony, is usually what happens, but I do think we have a little bit of an extra business, right?
Well, I want to talk about this again because this CME Group Battle of the Bonds Interest Rates Trading Challenge, the link is down below in my YouTube description. It's also on the website. I just think that so many people need to understand the bond market better, self-included. And, I understand how to trade it from a technical perspective, but I want to go in and potentially play other strategies and do so. I'm not a big sim guy past that kind of point, but I like these competitions for it. Go and learn. You could trade all the different interest rates in here. It's an interest rate challenge that CME Group has, and you get to see what other people are doing and how they're trading the bond market. It's a great way to go and test your strategy, test your skills against other traders. And there's real money attached to it. So it's not like just trading a sim. The winner gets, let's see, $2,500. Second place is $1,500. Third place is $850. To me, these are fun, and so Battle of the Bonds, interest rate trading challenge at CME. I love that they do this. And you can go and check it out at CME Group's website. Like I said, the link is in the description, and also it'll be on my page on anthonycrudele.com.
Oh, that looks good. They did that with the gold, right? They did that with the trading metals. I think they did it with currencies just recently. Now it's bonds. I think this is great what they're doing to get engagement. But Anthony, I want to say thank you again for hosting the show. As always, really informative, great topic this week. And thanks to the viewers for coming along. Where can people find you as usual?
AnthonyCrudele.com, and also go to placeyourtrades.com. I've got a lot of cool stuff coming up with PYT, Place Your Trades. And we talk about event contracts. We use NinjaTrader, which is also Trade-Evate. We use the Trade-Evate platform to trade event contracts. I think it's super interesting for traders to check out what we're doing and understand what event contracts are. And there's just a lot of things coming up on there, so check that out.
Right, and you can sign up for their emails. I get your emails all the time, Anthony. So thanks for that.
Yeah, cool. And we've got something cool coming out in the morning soon that I'm going to be doing a lot more on PYT. So a plug for that.
Good. Well, I'll look for that. Thanks everybody for showing up and watching our live stream. We'll finish the day here at NinjaTrader with Mike Burke. He's going to be at bars closing today, as he is mostly on Thursday afternoons. He's going to wrap up the day. In the meantime, have a great trading day. We'll see you next week.
See ya.